Hi everyone, I hope you guys are all doing very well. Just wanted to do a quick video here, just talking a little bit about how gold and silver can protect the purchasing power of your currency in the short run. A lot of times when my brother and I talk about gold and silver, we really talk about trying to protect our purchasing power on a long-term time horizon. However, I think that what's been happening with the Canadian dollar in relation to the American dollar is really, it gives us an illustrative chance just to kind of point out how gold and silver can help protect your purchasing power when you do have quite a large currency devaluation and also just a big loss of purchasing power. Before I get into it though, I just want to say right up front at the beginning of the video, thank you to everybody for your great support on the video that I put out 2 days ago. That video got quite a bit of great comments. It really spurred some great ideas that hopefully my brother and I can make into videos. But as always, your support and every single like, comment, and to some of the new subscribers, that's always greatly appreciated, and I just wanted to state that up front. But just getting into the idea, looking at how gold and silver, again, no guarantees, and I'm definitely not trying to say what people should do with their money. However, I do think that there is an illustrative kind of situation to be made. Just right in front of you on the screen here, we're looking at the trade of the Canadian dollar to the US dollar, and as you can see, in the last year, the Canadian dollar has lost 17.7% of its value in relation to the American dollar. As you see there was a huge drop in the middle of May, and then ironically enough, in the middle of October, the Canadian dollar was trading right around 78 cents. However, there's been a 10-cent drop down to 68 cents in that time frame. I'm not going to say that there's a correlation there, but I'm going to say that that's when our new prime minister was elected. I'll just put that out there for no particular reason. Wink, wink. But anyway, also too, in the last year, the Canadian stock market has also gone down about 16.5%. And I'll just put this out there just for an illustrative purpose as well. Within the environment of a decreasing dollar, we've also had a decreasing stock market to pretty much the exact same extent, 17.7% on the Canadian dollar and about 16.6% with our stock market. Now, just looking at gold and silver, the prices on the right here, just in this chart, this is the silver price performance in the American dollar on the day, the 30-day, 6-month, 1-year, and 5-year time horizons. And then just down here, we have the same time horizons, but this is the gold price performance in the American dollar. So as you can see, when priced in the US dollar, silver and gold have had quite a significant decline, just pretty much on each of those different time horizons, the 1-year and the 5-year particularly. The American dollar has been quite strong over the last couple of years. However, the perspective from a Canadian like myself, and I know we do have quite a bit of Canadian listeners, is quite different for us. Let me switch these to the Canadian dollar performance. And it's not so much in relation to silver, although we are up on the 30-day and 6 months. But if you look at gold, gold is up on the 5-year, 1-year, 6-month, 30 days, and on the day, which is really quite significant when compared to the American performance, the American dollar performance, whereas you had double-digit losses on the year, if we're just focusing on the year, for silver and gold on the year time horizons. You have about a 4% decline on the 1-year silver price, but you also have about a 4% increase on the 1-year gold price. And that's pretty significant in my mind. Even though gold and silver and the American dollar have gone down quite a bit in relation to the US dollar, in Canada, gold and silver is protecting our purchasing power to quite a significant extent. Again, of course, it is down on the 1 year, not as much as the U.S. dollar, but it is up on the 1 year time horizon for the gold price, and 4%. That is quite significant, especially when you compare it to a double-digit loss in the U.S. dollar, and especially as you also compare it to a 17.7% loss in the purchasing power of the Canadian dollar, and then also a decline of 16.6% with the Canadian stock market. So why is this important? Again, I'm not saying that you're going to sell your silver, or that we're going to sell our silver, or that, silver and gold is the perfect protection in a inflationary environment. But I do want to illustrate the fact that right now, with the decrease in the Canadian loonie, the Canadian dollar, there has been an offsetting inflationary, which is an increasing price because of the devaluation of our purchasing power. Canada has to import a lot of its food. I think I read somewhere around 80% of our fruits and vegetables are imported. But anyway, the weak dollar has caused a large increase in food prices. If I scroll down a little bit, there's a nice chart on this news article from the CBC. If you look down at the bottom number, the overall food increase in price for 2016 looks to be about 2 to 4% increase in price. Now, that 2 to 4% increase in price for 2016 is significant, but even more so if we look and find, just with this very recent article from the CBC as well, this was from yesterday, January 18th, it just kind of mentions down here that the increase in grocery prices for Canadians in 2015 was 4.1%. So you might get 4% increases on back-to-back years for 2015 and 2016. If you look up here, it gives a really nice number, unfortunate number, by the way. Canadians had to pay about $325 more for food in 2015 when compared to 2014. And then also too, going forward, it looks like they're going to have to pay $345 more in 2016. So that's almost a $700 increase in just 2 years, which is just on top of what you were already paying for groceries. But just remembering this 4.1% increase in the last year, if we go back to our silver price, again, on the 6-month time horizon, you would be okay. You would be able to offset that 4.1% increase in prices in 2015. Not so on the 1 year time horizon. Silver did drop about 4.18%. However, it didn't drop as much as the stock market or the dollar. But if we look down at the gold price, you would have been able to offset pretty much, again, a 4.1 increase in food prices, but then also a 3.84% increase in the price of gold. When you compare the increase in food to the increase in gold price, they pretty much cancel out. And if you were to sell your gold, again, in a perfect theoretical world, you would be able to keep your purchasing power, and you wouldn't have to have eaten that increased price in food. But I do think that this is illustrative. Again, there's no guarantees, but it does kind of signal to my brother and I that right now in the Canadian situation, where we have a Canadian dollar that is significantly losing its purchasing power pretty much day by day, it seems like it's been a nonstop loss for the entire year, even though there's been some up and downs here and there. Again, silver and gold may be good for us to be able to keep our purchasing power just in the current inflationary monetary and fiscal policy. That doesn't even get into all the other increases in prices out in the economy. I just wanted to illustrate it using food prices, but also too, it's not discussing what the Bank of Canada is going to do, and also too with the amount of deficit spending that our federal government has been kind of alluding to over the last couple of days. And it is going to get interesting, even more so. Again, right now, Canada is just, in my opinion, just kind of a petri dish of experimentation to see what's happening and kind of apply it to our silver and gold stacking. But we do have the Bank of Canada making its decision tomorrow, January 20th. I believe it's at 10 a.m. whether or not they're going to do a further interest rate cut. There have been some, I guess what I would call some sane commentators out there that are calling the Bank of Canada crazy for wanting to further reduce the interest rate. If you didn't know, I mentioned it in the previous video, but the Bank of Canada cut rates last year in 2015 from 1%, and then they cut it 50 basis points to 0.5%. People want them, and I think the Bank of Canada is kind of leaning this way. They want to further cut the interest rate tomorrow. It's hard to make a prediction, but if I had to guess, they are going to cut. But who knows? A lot of people have been kind of getting in their ear over the last couple of days. This article in particular just kind of warning that a further rate cut would significantly hurt our loonie even more. So there's a lot of interesting things on the horizon. Like I said, a lot of your comments from Sunday's video really spurred a lot of great ideas for different videos that my brother and I can make. Hopefully we can continue talking about this rate cut after the decision tomorrow. But I do hope that you found this video interesting. Again, I just wanted to illustrate a little bit how in the Canadian perspective, when we have such a devaluation of our dollar and a significant loss of purchasing power, just how gold and silver may act to be able to protect some of your purchasing power. Again, on the 1-year time horizon, silver was down, but not as much as the stock market. It was down about 4%, but on the 1-year time horizon for gold, there was a positive increase in the Canadian dollar when there was a double-digit loss in percentage on the American dollar. But I hope you guys are having a great day. Thank you so much for all of your support. If you could like, comment, and subscribe again, my brother and I always greatly appreciate that. Again, I hope you found the video interesting, and I'll see you guys soon. Bye for now.